Hello, good morning everyone, and welcome to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Tuesday the 22nd of July. The European markets have actually bounced this morning, and that's come amid the improvement in the geopolitical tensions that we've seen in the past overnight. And that comes amidst the fact that the separatists have now handed over the black boxes of the flight recorders to the Malaysian authorities, and also they're allowing access to the bodies and potential access to the site as well. So that is improving investor sentiment. And furthermore, the situation in Gaza potentially has a possibility of a ceasefire, with John Kerry and Ban Ki-moon also meeting in Egypt today. So the general theme is of a slight improvement today in outlook for investors. But we need to keep in mind that the fact that there's also the prospect of further sanctions over Russia, and that could hit the markets at any stage. That possibly could be coming through even today. So just keep an eye out for that. But at the moment, Asian markets were positive overnight. The Nikkei bounced, and that was also helped by the weakening of the yen, again linked to the improvement in trading sentiment as well, but also the European markets have been helped higher in early trading today. The dollar has also bounced amidst this improvement, and it's actually now up at 80.6, pretty much bang on. And I've talked about that being a bit of a pivot level there. And what if I zoom out here? You'll see 80.6 is hit as support and resistance on numerous times over the past few couple of years. In fact, 80.6 happens again and again throughout this the last few years. So it is an interesting level, seems to be on dollar index, and one to, I think, keep an eye on. We've got a fair bit of US data out today, actually, that could have an impact on the dollar as well. Starting off at 1:30 with the inflation data. That's actually expected to come in line with last month at 2.1%. That's at 1:30, and then we move on to the house price index. That's at 2 o'clock. Also, again, expected to improve from last month. And then at 3 o'clock, we've got the existing home sales forecast to improve from 4.89 million on the annualized basis to up to 4.97, which is around about a 2% increase there. So housing data and also inflation remaining strong, that would be positive for the dollar, because it just suggests that the US economy is remaining on the recovery scale, and that improves the prospect of potential tightening. So that is why the dollar would be strong on the back of that. But that's this afternoon. This morning, we haven't really got much data out today, so we're just trading on the back of this improved sentiment. So we'll see how that pans out. My chart of the day is the S&P 500, and I've been looking at the S&P 500 over the past few months, and it continues to find this support at higher levels, being used in a sort of a stepped advance now. And it's just once again on the back end of last week. That was Thursday last week. Found support on the previous breakout level. You got a nice band of support between 1945 up to 1955, and it hit that support, pretty much used that bang on, and it's now looking to find a move up towards the all-time high again of 1986. You look at these momentum indicators as a strong chart. This is in a bullish configuration. There is a slight drift, but that's absolutely fine, because there wasn't a new high made on the S&P, so that a slight drift backwards is not a disaster by any means on the MACD lines. If the S&P had started to make new highs, and those new highs were not being confirmed on these momentum indicators, then yes, you'd start to think about potential loss of impetus on the upside for the momentum indicators. But that's not the case at the moment. It's just in consolidation mode, and I think it's just building for this next breakout to the upside, and it could be seen. You've got some earnings season in the States is going well, and certainly it looks as though that we're going to be breaking into new high ground once again. The outperformance of the S&P 500 against the other indices is fairly significant, and the S&P has held up extremely well in light of the geopolitical events that have been driving these markets, and certainly it suggests that the support is still there for the market, and we could see further gains, certainly above 1986 and probably towards 2000 in due course. But I wish you good luck in your trading in the S&P 500 today, and don't forget all that housing data this afternoon could certainly have an impact, and also the inflation data which comes out just before the market opens. But I wish you good luck in your trading, and I will speak to you later. Thank you.